The Nasdaq hits a record high ahead of earnings from Nvidia. I'm Lisa Bernhard with Reuters, and joining me today is Ross Mayfield of Baird. Ross, chip makers are helping to boost the Nasdaq today, with Nvidia jumping, with at least three brokerages raising their price targets on the stock ahead of Wednesday's earnings. Should this one stock hold so much import, and can it deliver again on outsized expectations?
It's a great question. It's obviously the most important stock in the world right now, I think, given the importance of the AI narrative to the rally over the last 12 to 18 months. So should it hold so much import? You can make the argument it should. I mean, it's the theme of the next 5, 10, 50 years is AI, and they are kind of the fuel to that fire. And the way cap indices work, it's always one company or another, and whatever theme is big at the moment, there's kind of a poster child for it. The important thing I think to note is that it has held up its end of the bargain for the trailing 12 months. It has been a huge part of earnings. Tech has been a huge part of earnings, but going forward, consensus estimates are for kind of a broadening of earnings of other sectors, more cyclical sectors, to kind of backfill some of that and help pull their weight. So tech has seen a bit of a sentiment reset over the last couple of months, which I think is really important heading into some of these prints. The Magnificent Seven still pulling its weight, but not nearly as solo as it had been at times. So I think obviously very important, but I don't think that the market is hinging on this one print, for what it looks like 6 or 12 months from now.
Okay, going to switch gears a little bit because today we saw another record high for gold and for copper, and silver hit an 11-year peak. Why are these metals shining today? Sorry about that. Why?
No, I love it. It's a great question. I've seen the term everything rally kind of bandied about, and I think it applies here. I mean, you have copper industrial metals rallying on the idea that maybe China is resurging a little bit, that the global recession that was widely expected was either not as bad or non-existent. You're having supply demand mismatches in a lot of these metals. With gold and silver, I think there's a real kind of resurgent demand for real assets at a time of, where the fiscal health of the US is questioned, where there are some geopolitical concerns still out there. But irregardless, everything is moving higher. And I think it speaks probably most broadly to the financial conditions and liquidity position here, and something that obviously the Fed is not going to want to see in their battle against inflation. So it is an everything rally. It's a great time to be an investor, but I think it's going to come with a little bit of concern on the part of the Fed that everything is moving higher, and that maybe it signals that liquidity is a little too abundant to actually tamp inflation down.
Well, one thing that's not moving higher today actually are shares of Target, which ahead of its earnings later this week said that it's going to cut the price on 5,000 items to lure more shoppers. So some other consumer discretionary brands like TJX also report this week. The inflation rate, as we know, is easing, but do you think that we will see more signs of perhaps a lower end consumer still struggling?
Yeah, I do. I think we're getting, to a period of normalization in the consumer, right? 2022, 2023, the story was reopening, excess, stimulus still in the system, people getting out and spending on experiences. Inflation was high, it didn't seem to matter. And I think what we're seeing now is that every day, every month, we move farther and farther away from the COVID-19 pandemic. You get to more of a normalized environment. And what you're seeing now is a bit of a bifurcation in what companies are working and how different sectors of the consumer are doing. So you mentioned the few that are struggling. There have been a handful of reports that have said, hey, we don't know what you're talking about. The consumer that we address is still going strong. Some of the card companies have said that consumer spending might be slowing, but really looks fine compared to longer term history. Delinquency rates and credit cards have kind of slowed to a halt. So I think you're seeing a bifurcation, but not an overall slowdown that would render, the US economic health concerning. You're just going to have to pick your spots better if you're an active manager. And I think different sleeves of the consumer are starting to split a little bit more than we've seen.